It's been a fairly bumpy 24 hours for global stock markets, with rising cases of COVID-19 and also the growing prospect of more lockdown measures both here in the UK and across the globe. But what about the commercial property market? It's not been such good news over the past 24 hours for that investment sector either, with a new survey out, which I'm going to talk about in this video, and also the government now proposing a ban of some commercial property funds within ISAs, individual savings accounts. So coming up in this video, I'm going to look at this latest update for the commercial property investment sector, let you know a little bit more about what that's about, what's going on in this sector at the moment. Hi everyone, I'm Martin Bamford, a chartered financial planner at Informed Choice, and in this video I'm taking a look at a new survey looking at the prospects for the commercial property investment sector, also looking at news that the government's considering a ban on some type of property investments within ISAs, individual savings accounts, what that could mean for investors too. So we're looking at the bad, the ugly, and the good, if I can find some good. I promise I will find some good by the end of this video. The good, the bad, and the ugly of the commercial property investment sector right now. So let's start with this new survey from the Royal Institution of Chartered Surveyors. They spoke to their members, who are all chartered surveyors, and they found that 78% are negative about the short-term outlook for the commercial property sector. That's up slightly from last quarter, when 76% said they were negative about the outlook. So it's not a good outlook for the commercial property sector at the moment, and really driving that negative outlook are two big factors. One is the death of retail on the high street, and the other is a shift in our behaviour in terms of where we work. So we knew already pre-pandemic that the retail sector was struggling. Our shopping habits have been changing for years. Increasingly we buy things online, and like so many things, the pandemic has served as a bit of a catalyst to accelerate that trend. So whereas before the growth in online shopping was a relatively gradual thing, when we all got locked down in our homes, when non-essential retail was forced to close during the lockdown period, all of a sudden our online shopping activities have grown rapidly. And that of course is having a big impact on retailers, on the retail sector, and then a knock-on impact on landlords who rent out those shops, those properties. The other factor is that a growing number of us are working from home now. Government advice remains to work from home if you can, and it appears many of us are still taking that in our stride and working from home in great numbers. The latest official figures show that around a quarter of people in the country worked from home in the past week. So even though there has been some return to workplaces, primarily offices, many people are still working from home. And that of course is also having an impact on, firstly, on commercial property prices when it comes to office rentals. Many businesses now reassessing their need for office space in the future. I know of several companies who have had break clauses in their leases and are not renewing leases on offices because their needs have changed post-pandemic. It's also having another impact on retailers, because if you don't have hundreds and thousands of office workers in city centres, you don't have customers, you don't have footfall, and that's having a really big negative impact on many retailers who just don't see the office workers, their core customer base, coming through every day. There's some suggestions that smaller centres, so villages and towns, are actually doing quite well from that change in habits. So more people working from home means that you're more likely to pop out and visit your local high street, but probably not in a town or a city centre. So that's the sort of pro and con on that side of things. This survey from the Royal Institute of Chartered Surveyors also found there was a pickup in some property sectors, notably industrial sites. So with that shift in shopping behaviour moving from high street to online, we still need warehousing, we still need distribution centres, and they're going to be the winners from all of this. If we're doing more of our shopping online, there's going to be more need for capacity within warehousing space, within distribution centres, to actually get us the shopping, to get it to the courier, to get it to our front door. So whilst there are some losers in the commercial property sector, retail and office space, I think there's going to be some winners too, industrial warehousing and distribution sites. RICS said that expectations for a fall in rents for prime office and retail space were the most widespread they'd seen since 2014, and there was also a weakness in student accommodation as well as another sector that's likely to be hit quite hard by this pandemic. And I've got a quote here from RICS economist Tarrant Parsons. Tarrant said the physical retail sector, which was already struggling prior to the latest crisis, is being hit hard by the accelerated switch into online shopping and a drop in footfall associated with social distancing. Likewise, occupier demand across the office sector remains in decline and may continue to come under pressure going forward as businesses reassess their office space requirements following the increased prevalence of remote working. So generally bad news there for the commercial property investment sector. Whilst there is some glimmer of light for certain parts of that sector, overall it's bad news for offices, for retail space. And of course we know that at the start of the pandemic, many property funds closed their doors, both in and out, for investors. They suspended trading. And that was because they were uncertain about the valuation models being used to determine the asset prices. It would have been unfair to allow investors to sell their property investments when those valuations were uncertain. This is called material valuation uncertainty, and it's where the property funds use an independent valuer to place a price on the value of the assets in their funds. That material valuation uncertainty has gone away now, so gradually property funds are starting to reopen. And this applies to what are known as open-ended commercial property funds. So funds don't have a limited number of units, but actually create units for each property investor who joins or leaves the fund. That's different to a closed-ended property fund, so an investment trust, for example, which has a limited number of units and the price is reflected by demand and also the underlying asset value. But open-ended property funds have had this issue where they've had to suspend trading for 7 months now in some cases because of this material valuation uncertainty. But as I said, we are starting to see some of these property funds open their doors again and allow investors to trade. One example of an open-ended property investment fund which is going to open for business again is from Aberdeen Standard Investments. They're going to open their £1.6 billion Standard Life Investments UK Real Estate Fund and their £900 million UK Property Fund from Aberdeen. Both of those reopening in mid-November. And commenting on that move, the fund manager called George Shaw said he knew investors had been inconvenienced by the suspension, but the group is focused on treating all customers fairly. George Shaw said, "We are delighted to announce our plans to resume dealing in the two funds from 16th of November. We recognise that the dealing suspension will have been inconvenient to investors. However, the decision was made to ensure the fair treatment of all clients and customers. Despite the market disruption due to the COVID-19 pandemic, we still consider UK commercial property has a role to play in a diversified portfolio for the longer term investor." And already reopened for business is the £2.9 billion Legal and General UK Property and UK Property Feeder Funds. They reopened on the 13th of October after being shut for 7 months. At the time, L&G said it was satisfied that valuations were accurate and reflective of the market for transactions. But we're still waiting for some other open-ended property investment funds to resume trading, including Janus Henderson, Kames Capital or Aegon, Aviva and M&G. So more news on those to follow. And if things were not bad enough for the UK commercial property investment sector, we also have some regulatory interference. So the Financial Conduct Authority has been consulting on the introduction of some new rules, which could mean a 180-day notice period if an investor wants to sell his or her holdings in an open-ended property investment fund. So that set of rules is currently under consultation. It's a notice period of up to 180 days, so up to 6 months, which would radically change the face of property investing in the UK if such a notice period was introduced. It would hopefully do away with this need to suspend trading in property investment funds during difficult market conditions, but it would make it a much longer term investment prospect to get involved in commercial property. Now, coming on the back of that FCA consultation, yesterday we saw the launch of another consultation, this one from HM Revenue and Customs, and they are consulting about potentially banning certain types of property fund from being held within an individual savings account, an ISA. And this ties back into the FCA's consultation. The reason for it is one of the ISA rules says you must be able to sell any investment or move to another ISA provider within 30 days of giving notice. And of course, if you've got a notice period of up to 180 days on your property fund within an ISA and you give notice, you can't move out of it within 30 days. So HMRC consulting at the moment on banning new investments into certain types of property funds, these open-ended property funds within an ISA. And again, that is likely to be very, very bad news for the UK commercial property investment sector. In launching its consultation, HMRC warned that while either approach they're considering could address the tax implications for consumers, they would potentially introduce greater complexity for ISA managers where property funds form part of a mixed portfolio. So that consultation closes on the 13th of December, and we're expecting the FCA consultation to close next week, and then final rules on that one being published in the new year. So more news on both of those consultations to follow as we get it, as we understand the implications for property investment funds. I promise some good news on commercial property investments by the end of this video, and I'll give that a go. Whilst clearly this is bad news for certain types of commercial property funds, so retail and office space in particular, and potentially for the wider open-ended commercial property fund sector, should we see a ban in ISAs, should we see the introduction of a 180-day notice period from the FCA, commercial property does play an important part still within a well-diversified investment portfolio, and that's because it tends to be negatively correlated to other mainstream investment assets. We've seen, as I said at the start of this video, some real volatility in global equity markets in the past few days. So if you can hold assets which tend to behave differently to your equity holdings, that can help to smooth out the overall volatility within an investment portfolio. That's really good for investors. It helps you to feel more comfortable with the ride you're going through in the short term. I'd also have to say that falling commercial property prices are likely to see some yields increase. We don't know to what extent yet, obviously, because if there's downwards pressure on rental as well as on property prices, that's not good news for yields. But if we do see a significant drop in commercial property prices and rental periods, rental levels are broadly maintained, then that could be good news for yields. Let me know down below in the comments what you think about this news around commercial property investments. Is this a good outlook? Is this a bad outlook? What actions are you going to take with your own commercial property investments? So let me know in the comments below. I'd love to hear from you. Until next time, I'm Martin Bamford. Thank you for watching this video. And remember, when it comes to your money, the more you know, the faster it can grow.